Alright, it's KING-KAMBUF, Unit 2, Property and Casualty Insurance, Contracts, Introduction. Congratulations, you have just learned some of the very important key terms in the insurance industry. One of the first things you learned is that an insurance contract transfers the risks of financial loss from an individual or business to an insurer. Remember, insurance is the transfer of the risk of the loss from the insured to the insurer in exchange for a payment. In insurance, the insurance policy is a contract between the insurer and the policy holder. This unit will introduce you to the basic principles of insurance contracts and how they are used. As a matter of fact, learning the objectives. After successfully completing this unit, you should be able to describe 5 elements of a legal insurance contract and how these elements apply to an insurance transaction. Officer, offer, acceptance, consideration, competent parties, and legal purpose. Identifying examples of the 13 districts, characteristics of the insurance contract. Insurance, the contract law, elements of the legal contract. Insurance policies are a legal contract that are subject to general law of contracts to the form a valid legal contract. 5 elements must be present. To remember this elements, we use the acronym CLOAC, CLOAC. Consideration, legal purpose, offer, acceptance, competent parties. The elements of a legal contract: consideration, legal purpose, offer, acceptance, competent parties. Consideration refers to the exchange of value. Each party to the contract must have something value in the other. In the insurance contract, the insurance provides consideration in the form of the paying and the premium and making truthful statements on the application. In return, the insurer provides consideration in the form of the promise and the payment to cover the loss if they occur. When they fear the word consideration, think of money, sir. Consideration, money and statements made on the application. Legal purpose. Today, to be valid, a contract must be for a legal purpose and not contrary to public policy. For example, an agreement to purchase stolen goods would not be valid a contract because it lacks legal purpose. The purpose of the insurance contract is the transfer the legal risk. Legal purpose, transfer of a legal risk. Legal purpose, risk transfer doesn't violate the law. Offer and acceptance. There cannot be a contract without an agreement between the parties to the contract. An agreement can be reached unless an offer is made by one party and acceptance by the other party. The parties to the insured contract are the insurance company and the insured. An offer to propose made by one and the potential parties to the contract. An insured who submits a completed application to the insurer goes along with the payment for the first premium is made. An offer to become insured by the insurer. Acceptance of the offer must be unconditional and unqualified. If acceptance is qualified or conditional, no agreement will be reached. If the insurance company issues the policy but the premium is higher than the insured applied for, the insurance company is not accepted. The insured offer must be made and accounted for to the insurer, and the insurer will be willing to pay the higher premium. The insurer has accepted the insurance company's offer and agreement has been made. Offers and acceptance. The offer by the insured. Insured submits application at first month's premium to the insurer. Insurer accepts the insurer's declines the risk. Counter offer made by the insurer. Agrees to issue the policy but higher premiums or restrictions, exclusions. Insured either accepts the conditions or withdraws the application. Competent parties. For a contract to be binding, both parties must have the legal capacity to make a contract. The insured must be of legal age, usually 18, and be mentally competent, sane, and sober indeed to make an insurance contract. Competent parties. Competent legal age, usually 18, mentally sane and sober, not on fucking drugs. Quick quiz. Which of the following terms describes a legal agreement? between two competent parties that promises a certain performance in exchange for a certain consideration, an offer, an acceptance, a contract, a consideration. Which of the following terms describes the legal agreement between two competent parties that promises a certain performance in exchange for a certain consideration, an offer, an acceptance, a contract, right? That's what we're talking about, right? Which of the following is not an element of a legal contract? An offer, an acceptance, a legal purpose, unilateral. Unilateral. It says distinct characteristics. Oh, that's it for that. We'll come back with the next unit after this. Distinct characteristics of insurance contracts. It's KING-KAMBUF, 100 proof, bringing you nothing but the truth. Learning insurance, property and casualty, the KAMBUF way. Nation of KAMBUF is here to stay. KAMBUF!